get to introduce one of my favorite people. Codie's been in my life for a really long time, and she was actually at our very first event that we had in Nashville, Tennessee, and just knocked it out of the park and has been on a wild ride ever since. So she is the founder and CEO of Contrarian Thinking, one of the fastest growing financial media businesses with 6 million followers. Now this got printed yesterday, so it's probably at what, 7 million? Yeah. She's very shy about what her opinions are too, just in case you haven't checked her stuff out. It's about 100 million monthly views. She also has a venture capital firm and Main Street holding company with smaller, what we call Main Street businesses. She's also the author of the book Main Street Millionaire, which you guys will all be receiving a copy of as soon as it comes out. Very exciting. So just think car washes, laundromats, property management companies. Her specialty is a roll-up, turnaround, add-on space. She built First Trust's $1 billion AUM Latin America business and has held positions at Goldman Sachs, State Street, Vanguard. She started as a journalist, won a JFK Award for border conflict. She has a master's from Georgetown and a bunch of other stuff. She's just super smart. And with all by the age, she's like, I think she's 19 now.
Special to me, first of all, before I get into it. One, thank you, Kelly and Go Abundance Women, because I had to tell her, well, first of all, how many people, I bet this room has a bunch, how many people in here have written a book before? Do we have a couple authors in here? How miserable is the marketing of the book? I run a bunch of businesses, I have turnaround businesses, and so writing the book's quite fun, and the marketing is kind of a funny thing. And so when I was talking to Kelly about it, I was like, I am just like, in it for the next 3 months in such a silly way because we're definitely not curing cancer over here. And she supported the book and I so appreciate that. And so it's because of her that you guys all get a copy of it. So that's really like thanks to Go Abundance. Okay, I think it's a good book too. You guys will have to tell me. All right, so I wanted to do something different today. Typically I do these big song and dances and it's not like a room where I could interact a ton. And that's not the case today. So I thought I'd do something totally different. I'm going to skip the PowerPoint. Those are on YouTube if you want them. But today instead, I thought I was going to do 2 things really quickly. I want to frame what's happening in the world. I want to frame the problem, because I think this room is full of problem solvers. Then I want to frame what I think the solution is, both for us and the country. And then I want to get into some of the reasons why we don't do the things that we know we need to do in order to solve big problems in the world. And then I want to have a lot of Q&A from you guys and sort of like live workshop, maybe. So by the end of this, if you guys agree with my problem and you agree with my solution, we can make some moves on it together. Does that sound good? Woo-hoo! All right, sweet. So here's the problem. This room is not America, really, right? Actually, this room is successful, wealthy, and when we compare it to the rest of the country, it's almost kind of astounding. So if you look at the rest of the country today, 1 in 2 Americans dies broke. What do I mean by broke? They don't have enough savings to cover their end of life. They leave loans and debt to their children. 62% of Americans cannot afford a $1,000 health care bill that's unexpected. The other 30% already have a $1,000 health care bill that has been unexpected and often go into debt because of it. In this country around us today, we increasingly have very few own things and very many who don't. That's actually not how we started. We started out quite with the opposite. And so when I started seeing this problem years ago, I was kind of obsessed with it, this idea of how are we so rich as a country? How are we one of the richest countries in the world? And yet, all around us, we have so many that don't have. That seems bizarre to me. And so I kind of had this investment thesis that was like, where the fuck the money go? I figured out a lot of it, and my thesis was like, I can't find it. And so I started digging in a little bit deeper, and I realized, well, what is the correlation between those who have a lot of money, and is there anything that's similar amongst them? Well, there's a couple things that are similar. One, we were told a big lie. I don't know if you guys know this, but this is actually really cool for all of us in this room. and our kids, that actually 79% of all millionaires are what? Does anyone know that?
First generation.
Self-made. Yeah. We don't inherit in this country, we actually make it, which is really fucking cool. That means that the road to wealth still exists. Now, there's one interesting thing about this 79% or millionaires in general. When you look at a group of millionaires, what do they all have, typically?
Real
estate. What's that?
Real estate.
Real estate? No, but kind of. 60% of all millionaires own a business, have ownership. 60%. And what's crazy is the higher you go up the scale of net worth, the higher the percentage of them own a small business. In fact, if you guys say, I want so much money it makes other motherfuckers uncomfortable, anybody feel like that? I'm like, I want the scoreboard to be off of the scoreboard. Okay, so if that's what you want, and say you want $30 million in net worth, well, 88% of those people own a business. So what this tells me is if you want to be rich, you have to own things. Typically a business seems to be the highest correlation. Real estate, great for many things. Typically taxation, a lot of that. Wealth preservation, for sure. But actual accumulation, ownership. So here's the problem. You know how you know you're losing at something? The Canadians are beating us at it. The Canadians.
That's why she's here. She's the teacher.
Canadians in the audience are like, oh shucks. So in Canada, 7.8% of Canadians own businesses. That seems low to me, right? But then you look at the US, 6%. 6 in 100 Americans own a business. So if we know that in order to become a millionaire, 60% likelihood you have a business, but only 6% of us own a business, that's where all the money is. The money is in the hands of the few, not the many. And if you take it like one step further, if there was a thing that does this at some point, if you get napkin,
Like
I don't
a
want to,
razor?
it's not like a postage stamp or something like that. This is great. Okay, so the part that's interesting about this today is, so then I took it one step further, and I was like, okay, so if 6% of us own businesses, that doesn't seem great. And then I think, well, what about like partial ownership, right? You think about the stock market, and you're like, I hear motherfuckers like Robinhood these days, right? The use is like, yeah, I want to gamify that. So you think, okay, maybe 62% of Americans owning stocks, that seems pretty good to me. Does that seem pretty good to you? Yeah, that seems pretty good. Small issue. How much do we own of the total stock market? Well, it turns out the top 6% of Americans own 87% of the stock market. So, not only do we not have full ownership of businesses, we don't have partial ownership of businesses, and oh, by the way, it's worse than that. Because if you were to look today and say, in the stock market today, are there 4 companies, really 3 companies, who own 40% of the stock market? The answer is yes. That's BlackRock, State Street, and Vanguard. And if you were to look at the S&P 500, you'd go, wow, it's worse. It's 80%. They own the biggest companies in the world. And then if you were sophisticated, you might go, well, Codie, they're passive. Like, they're not active investors out there, owning those outright. They put passive and Social Security out, and they own them in mutual funds and ETFs. Have you guys heard that before? Okay, it seems reasonable. They're not trying to influence anything. Oh, except, whoops, the CEO of Vanguard, Bill McNabb, actually said publicly the quiet part out loud, which was, we're definitely not passive in governance, which means what? They're influencing the outcome of these companies that they own. And I should know, because I'm part of the problem, I work at 2 of those fucking companies. I was little back then, so I didn't really understand what was happening here. But all around us, we're seeing this concentration of wealth. And I think this is a much bigger problem than we understand, because what we're also seeing increasingly is the correlation between the people who make a lot of money in the stock market, let's say, and the top 4 companies in the stock market, which would be the big tech companies. They own about 80% of the upside that we've seen in the last 5 years in the stock market. So if you were to take out NVIDIA, and you were to take out Amazon, and you were to take out Google, you'd actually be net negative. So what does that mean for the average non-tech worker? Well, not great. And especially know why it's not great, because let's say back when I was first born, if I had bought stock, not in NVIDIA because that obviously wasn't around, but at the other big 3 or 4 tech companies, you could buy that stock for, let's call it, low double digits, high single or mid double digits. And now today, what are we looking at? We're looking at mid triple digits for those stocks. So increasingly, like, the big keep getting bigger, they keep getting more concentrated, they tell us not to worry about it, and then they go gobble up everything. And if that's just the public markets, then I think, well, hey, small businesses employ 60% of Americans. So most Americans work for small businesses. Most of us at some point owe our paycheck to a small business. So that could be okay, right? Because they're not publicly listed. Well, here's the problem with that, 2 words, which is private equity. Private equity used to, in 2000, they owned 4% of private companies, small businesses. Today, flash forward, they own 20% of America's companies. 20% of Americans' companies are owned by a shadow group of people who have private investment in these companies. They represent about 6.5% of GDP, so the total production of our company. The economic value of this country is increasingly owned by a couple big public firms and a couple big private firms. And so when I started to see this, I thought, God, it doesn't take a student of history to look back over time and think, doesn't usually end that well when there's just a few rich guys on top, does it? A lot of pitchforks, like I've watched the movies. And so if I'm thinking about the continuation of this country and this beautiful experiment we have here, which is this idea of we the people, for the people, by the people, and a representative government, not a group of elites who push us around, I think that there's some work we have to do. And so as I right about when I was at the slit your wrist phase, it's I don't know how to solve this problem, I found some interesting stories. And they were of all places in Japan. Because you see, Japan is about 20 years, maybe you could say 30 years ahead of us in a few things. One big one is what? Demographics. They're old and they don't have a lot of immigrants. What's interesting is Japan is very similar to the US in a couple of different things. So, when I started to look at Japan, I saw something called the Economic Viability Index, which basically is Japan's governing force saying, ooh, I see an issue. They were looking at the 2008 market correction and what happened in real estate, of which we're all familiar in here, and they were like, hey, we remembered seeing some asymmetric risk, some real bad upside risk in 2008 in the real estate market. We were like, concentration of the entirety of the US's single-family homes, levered up massively, dark pools where you can't see them, and teachers trading those stocks like they are bonds. Probably not a great idea, right? And so they saw this happen in 2008, and I was at Goldman in 2009 and 10 when this was really shaking out. And so Japan started to think, what's our asymmetric risk as a country? And they started to realize something. Aging demographic, very similar to the US. Guess what? In Japan, just like in the US, right now, we have 60% of all small businesses owned by people who are 50 plus years old. What's fascinating about that is those people that own these small businesses are nearing what? Retirement. At a rate that we actually really can't imagine, which is about 10,000 of them retiring every single day. Which means in the US, we think that there's somewhere about 75 million small businesses that will be closed, sold, transferred over the next 10 to 20 years. But the problem with this sounds interesting, right? You're like, that sounds like supply. What happens if there's a massive amount of supply? Costs go down, right? That's good. If we've got money and we're investors on the table, I like that number, actually. But what we saw in Japan is a guy by the name of Yokohama. His last name was Yokohama. Got on the front page of the Wall Street Journal. And why? Because he was giving away a business that did millions of dollars a year in revenue, did hundreds of thousands of dollars a year in profit, and he was giving it away for free, his business. Why? Why would you give away a business for free? Because that generation's youth wants to TikTok. They don't want to own a plumbing company, even if it makes them millions of dollars. And so increasingly, we've got this group of owners who are adrift, and they don't actually know how to transfer their business or their assets to the next generation. And what the crazy part is if we don't fix this in Japan, what Japan said is that they were gonna lose 1 out of every 10 jobs in Japan. That is worse than the Great Depression. That would be a risk so big that a tiny company like a country like Japan probably couldn't be able to recover from it. And so they created an economic center to basically say, hey, how could we help the youth buy these businesses? Well, the interesting part about the US today is we got the exact same thing going down here. And so I started to realize, if that's the case, I'm always looking for opportunities in the market that are like, I don't want to ever speculate, but I want to have an opportunity to not have to be the smartest person in the room and also take advantage of a trend in the market. And when I looked at the small business market, I saw something really unique, which is for the first time ever, I saw a market in which 60% of all businesses that are bought and sold in the small business space are sold with something that you guys know about, but most people don't. Seller financing. Could you imagine if every single real estate deal you did, 6 out of 10 times, the thing is, I'd love you to buy my house and I'll pay you for it. You'd be like, fuck yeah. Absolutely, And in small business, that's what happens. 60% of the time, seller financing or them using future revenue and profits of the business in order to have somebody else buy their business is happening all around us. And I think what happened in a lot of ways, if you think about it, if we've got private equity buying up all of our businesses, if we've got increasingly the big four also buying up our businesses, Amazon, for instance, has done 191 on record transactions to date. They don't grow organically, they grow through acquisition. So we got private equity buying these, we've got big conglomerates buying these, and then simultaneously we've got just older business owners that are like, I'm tired, right? They're just shutting down. And if I originally sort of looked at this and thought that couldn't be the case, but I'll play a little game here with you guys. How many of you all, and keep your hand up once you raise it, how many of you all have owned or do own a business? Okay, keep your hands up. How many of you have a situation where if somebody came up to you and they said, I will buy your business at the right price and the right terms, you would say, absolutely not? 2 hands like liars, just kidding. Also, I think it always depends on the terms, right? Yeah. If they catch you on a bad day, if they catch you after 10 years, if they catch you after a fight with your husband, it's up. You could sell this thing. Yeah. And the truth of the matter is, with small businesses all over the place, we know that. Here's the second thing that I realized. We were actually sold another kind of lie. And the lie was one word, which was startup, right? They told us that this was the way to wealth, right? We got all these shows online about Silicon Valley. We see them on the cover of Forbes. When was the last time you saw a janitor on the cover of Forbes? When was the last time you saw a real estate investor on the cover of Forbes? They're like those boring things. That's not where the money's made, right? No. We want to celebrate the guy who built dating apps. That's good for society. And so anyway, we got sold these ideas of startups. Well, what's interesting about a startup is we know some of the numbers, but I don't think we've internalized them, or we're total masochists because we keep doing it. And the idea is basically this. 90% of startups fail, right? We know that. We know that 90% of startups fail, right? So we've got this group of activities where 9 times out of 10 you're not going to make it. And we're like, you know what? I'll do that. Seems like good odds. I think I'll do that. And then on top of it, we go, but that was the rest of them. It's me. And you go, okay, fine. Well, the average startup for 3 years does what? Sucks your money dry. You pay for the right of potential future profit at a 90% failure rate. Cool trade. And then, on top of that, let's go past the 3 years. Let's go past the 3-year period and say, what do the average founders make who do a startup? We are so rich, we're making 40 to 60K on average as the founder of a startup after 3 years. Yeah. Don't spend it all on place. And so, listen, do I think that we should stop starting up and innovating in this country? Absolutely not. Sometimes you have that thing inside you that you know you need to do no matter what, and you are so obsessed you couldn't stop for the want of it. Oftentimes, that thing doesn't make you much money. Am I right? All the authors are like, yep. The problem is, I think we often confuse startups and passion with profit. And those two things are not typically the same. So instead of having this culture where we celebrate profit, aka sustainability, we celebrate the start. And we don't actually celebrate or talk about the fail. And so at a certain point I was like, well, I had to I'm a little dense. So I had to play this game multiple times, right? I was in stock market investing. I worked at some of the biggest firms out there doing that. It's really hard, by the way, to beat those guys. Then I went into early stage cannabis investing. Hans and I know that that's really hard. And I thought, I thought that we could ride some of these waves of businesses that were on the cutting edge, that were moving forward. And what I realized really well is that it's very hard to make money in those industries for a reason, because we all think that we're the 10%, not the 90%. And in fact, we all can't be the 10%. And so I started seeing these trends and realizing that it doesn't really make a ton of sense to fight the trend. It makes a lot more sense to flow with the trend. So I obsessed on this idea of buying businesses. And the reason why is because there's something called the Lindy effect, which maybe you guys are familiar of. Lindy is really relevant to real estate as well, but essentially means that the longer something has been around, the more likely it is to have continued to have been around. So year one of a business, you have like a 50%, not really, let's call it, you have a 30% failure rate. Then year two, you have a 40%, all the way up until you get to year 5, you have like 50% of businesses that have failed. But once you get past year 5 and 6, you've already gotten into the period where you've decreased your ability, your likelihood of failure substantially. Because, you guys have kids, a lot of you in this room. There's first couple years, they're little kamikazes, right? It doesn't mean they're trying to die. And as they get older, slightly less, right? Slightly. You want to kill them. At least that's what I hear. And so I was like, okay, I like the math here. I like that the longer something has been around, the more likely it will continue to be around. That seems more reasonable to me. And then I liked this other idea about small businesses, and let's play a game, because you all are more up to date on the real estate market than I am, so you'll know the difference. And I call this why I like buying businesses better than real estate. Is this the wrong room for this? so okay, here's the thought. If you're like, okay, Codie, the thing is, I love buying real estate, that's my jam, that's where I make all my money. Don't you see David Osborne's plane? Right? Like that's where I'm going. It's the same track. And I go, okay, let's look at the numbers on this. How many of you believe this assertion that doing a big deal is very similarly hard to doing a small deal? True or false? True. Running a business that doesn't make a lot of money, just as hard as running one really that does make money, right? True.
Also true.
So if that's true, then what we want to do is we actually want to go where the game is easiest, right? We want to go where we have more of a mathematical likelihood of continuing to have success based on historical success. And so if you look at real estate, you could say, and you'd be right, hey Codie, I've never gone to one of my real estate properties unless you're like Aaron Uchistegi, maybe buying these delinquent houses or whatever, and it's just like burned to the ground and worthless and nobody will buy land from me. Like that's not likely. In small business, for sure, you can have a business that grows and dies. So there's more volatility in small business, but let's look at the math overall. Let's say the average single family home in this country, wild, you guys know this more than I do, used to be, when I was younger, $200,000 a year, now about $400,000 a year, sound right? Yeah. Okay. The interest rate in the US now, I don't know, what do you guys get for single family? Yeah, you're getting robbed, is what's happening. Okay, cool. So we got, let's call it 400K at 6.5%, and how much you pay? How much you getting in rent for one of those properties if you want to rent it out to somebody? 400K house.
$3,000.
What do you think? $3,000. She's in a nice neighborhood.
Yeah.
Okay. And how much profit are we making on that? How much are we keeping in our pocket?
400.
Also rich neighborhoods. Okay. Average. $147.
Yeah.
So, what we're doing here is a risk trade that looks like $400,000 debt, risk outstanding, 6.5% for somewhere between $3,000 and at best $400 in profit a month. So let me ask you this trade. If I go, hey, if you give me 400K, I'm going to give you $400 a month until that pays off. Does that sound like a good trade to you? I'm down if anybody wants to make that trade for me and I get to get the 400,000 for $400 a month. This trade is fucking awful, you guys. And we have been told for so long that this is a good trade. And then what do you do in real estate? You go, how many doors you got? I got 10,000. You know what I hear when I hear 10,000 doors? Misery. I hear like a toilet flush. And I hear flooding, right? So, listen, I don't like a trade in which I have to put $400,000 of risk down for a couple $100 a month in income. Now, what's interesting about the end of small business is, let's say you're able to buy a small business for $400K. The rate, we could say, is the same. It's probably a little higher in a small business. Let's call it somewhere between 6 and 10, unless you're doing seller financing, which you should. Then how much are you making on a $400,000 a year business on average? Well, we could make this really easy. Well, we won't. Okay, so the average small business, it's really somewhere between 30%, but we could say somewhere between 10 and 30% margin for a small business. So instead of making, somebody do the public math for me, what's 400 times 12? Are there any men in the room?
48,000.
Say it again?
48,000.
Yeah, okay. 4,800. Hans is like, I know the answer to this. You were born with the answer to this. Okay, so $4,800 a month for a $400,000 trade. Do you think that you would take that trade, or would you take $40,000 a year? I don't know about you, but instead of $4,800, I'm going to take a 10% trade. And if I could take that trade instead, and I could turn that trade into 80 or 100K, I'd probably be pretty happy about that. Also, I don't know about you all, but how much work would you have to do in order to 2 to 5x the value of a single family home that you bought? Is that possible? No, and yet you can in a small business. I think the problem is that we have normalized and institutionalized real estate investing, which is actually a beautiful thing, but was created for us to be owners of our own homes, right? Like, that's why that was created. It wasn't actually created to be an investment market overall. In fact, the way the mortgages are structured, that's not it at all, which is why so often you guys have to get creative with where you get additional financing. Because here's the other thing about mortgages that's crazy, is when you get a mortgage on a house, do you have the bank go, hey, I feel like that house might end up making you some money, so let me loan you a loan on the house for potential income rental, or rental income on the house. Does that happen? No, that'd be sweet. Instead they go, how much money you make? Oh, you make $200,000 a year? Okay, I'm gonna give you a loan that's worth whatever I think your value is at $200,000 a year income. So you guys are inherently what? Capped at how much money you make. Unless you get higher interest loans, or unless you raise from somebody else, or unless you're top tier, right? Well, in buying a business, how do you get a loan for a small business? Do they go, hey Kelly, you want to buy this $1 million business? Do you make $500,000 a year in order to negate the cost of this $1 million business? No. They analyze the business and they say the business makes $1 million a year at $100,000 in profit a year. We're going to give you some loan to cover the purchase price of 100 times 2 to 3x, which is how businesses are bought, so $200,000 to $300,000. Instead of you only getting a loan on you as a human, you get a loan on the business, right? And as I look at this trade, which looks a little bit like a Mad Woman, but as I look at this trade, in actuality, what I see is that real estate is good for volatility protection, for tax reasons, maybe even for people who want less risk up front, but that might be more perceived risk. Whereas a business is good for what? Cash flow. And it is very hard for you to get the type of cash flow that you need to create multi-million dollar wealth, to create $30 million, $100 million with real estate. And so what do we do instead? The really, really rich people don't go out and buy 10,000 single family homes. What do? They scale up. They start doing apartment complexes. They start doing multifamily. They start buying hotels. Terrible trade, hate that business. Hard business, where you have a business, or let's call it real estate masquerading at a business at negative net profit margins that only really makes money because of the tax breaks, which is what most hotels do. And so I think we were sold something that many people knew didn't make any money, which is why you see a lot of millionaires made from real estate, but how many billionaires? Not very many. And the reason why is because for real estate, you really need what? You need a massive amount of time and a massive amount of capital. And if you have endless time and capital, real estate's a great trade. Then you can play. But if you go to the big guys, if you go to the richest guys in the world and you ask them what do, they do one thing. They do leveraged buyouts. And leveraged buyouts really aren't that old. This actually started happening within our lifetimes, so less than 100 years ago. We started having companies and private equity firms realize that instead of using their own money to do deals, even big corporations, they could use other people's money to do deals, which is what a leverage buyout is. And that's where we got this new industry of private equity barons. And then if you guys think that you all are the smartest on tax breaks, maybe, but you don't make nearly as much money as the private equity guys do. Because the difference is something called long-term capital gains and investment income. And basically what you have with private equity is you have deferral of taxes. You also have private equity GP allowances, which allow you to carry forward a lot of the tax breaks. And you have businesses that have a ton of inherent tax breaks within them. And so the really, really rich, they use real estate to offset the massive amount of money they make other places. They don't make their money from real estate. You know, why do you see the biggest guys in real estate over time syndicate, do big deals, raise funds? Because the way to make a lot of money in real estate is to have a lot of money. And there's not a lot of other ways to do it. Now consider that something different than what I do. So let's think about this on all levels of the game. So if today you're like, all right, cool, sounds great, Codie. I don't have money to buy a business today. I don't have it. Well, what would I do instead? I might do a deal like this. I might go to a company like Strike Fire Productions, which is one that I own. And this is a podcast production company, right? And maybe I have some friends who have podcasts. And I might go to podcast production company, Jonathan, and I might say, Jonathan, I have $0. I can't give you any money. But Jonathan, can I hear a little bit about the company? As the CEO. How's the company doing today? What are you doing? He's like, I love podcast production. I'm really good at it. Our product fulfillment's amazing. We have all these clients. They really never leave, but I hate selling. How many small business owners are like that? I hate selling. I don't know where to get new leads. If you were to ask small business owners what their biggest issue is, it is leads. Okay, so he goes, listen, great product, nobody's buying it. So if I go, okay, Jonathan, how much money do you guys make a year? I don't know, let's make it easy. $100,000 a year, right? We make $100,000 a year. Okay, cool. Do you have capacity for more clients? Yeah, totally. Like, it's really easy to spin up these additional people that oversee them. I think we could double the business. All right, interesting. So you could double the business today, but you aren't, right? Because it's hard, right? Yeah, I don't really know how to. I feel like I don't have time. Cool. So what would happen if I said, all right, if I bring you another $100,000 to this business right now, could I keep 25% of the additional $100,000 that I brought you this year? If I don't bring you anything, then you pay me nothing. And if I bring you something, could I take 25% of that 100,000 and 25% of the company overall in perpetuity? I only keep the 25% as long as we keep growing the business. Would you be open to something like that, Jonathan? What do you think he says?
Yes.
Yes. All over this country, we have business owners who are tired, old, distressed, maybe have disease, maybe getting divorced, maybe it's dull. They are ready for the next move. And they need more leads. And then we have a generation of young entrepreneurs today, or young hustlers, who are ready to fill one of their greatest leads, which is how you can get me more money. So if you have $0, you can get a percentage of a company with really three things. One, bring me in more money, so more revenue. If you can give somebody more revenue, you can get a percentage of a company for $0. What else? Well, cut my costs, right? If you can help me keep more of the money that I already make inside of my business, I could give you a percentage of the downside. This is what consultants do. You guys have heard Deloitte come in there like, pay me billions of dollars plus a percentage of what I save you, and they come in there and they fix the company, right? Fix. What do? They cut costs. And the third way that you can do it is if you decrease pain. So if you go to an aging entrepreneur, let's say, that's run a small plumbing company for a period of years, he's really tired, he wants to take a vacation, he'd love somebody to help operate the company long term. Eventually, he wants to exit the company, but in the interim, he still needs the income, right? What do you think might happen if you started apprenticing, you insert your daughter, your kid, your husband, whatever, into the business, and that person starts decreasing risk in the business overall, allows this person to go on vacation more frequently, and eventually has the trust to offload to another business and get an annuity for 10 years after. What do you think the owner says?
Yes.
Yeah, probably. And let me tell you why the small business owner would actually be open to something like this. Because the average small business owner has 90% of their net worth tied up in what? Their business.
Their business.
So what's fascinating is right now in the world today, there's this number going around, which is $68 trillion of baby boomers' wealth will transfer from one generation to the other. Well, remember when I told you guys that they own 60% of all businesses, how much of this is transferable assets and how much of this is in their business? Now what happens with these small business owners is they don't have a transition plan. 60% of them have no plan, they just want to run their business until they die, which is soon. So they can either run the business forever or they can look for an exit ramp. And this is where I think for the first time ever, you have a trade that is a win-win trade intra-generations. How many times have you heard young people go, okay, boomer? You heard that? How many times have you heard young people go, you guys fucked it up for us and now I have more expensive universities than ever, 3 to 4x more expensive for our kids than for us when we were growing up, or our parents, my parents I should say. We have not only that, we have wage stagnation. So for the first time ever, 30-year-olds are earning less than their parents did at 30 for the first time ever in this country. Simultaneously, we have 85% of young people don't like what they do for a living. Not to mention on top of that, they're more productive. Productivity up 20%, wages stagnated over time. We have a generation of people who are angry, they're broke, and they have no outcome in life that they think looks feasible. They're dying by deaths of despair. Why do you think we have fentanyl levels up? We have anxiety levels up. Now what would happen if instead of teaching these people about fucking pronouns, for God's sake, we started teaching them about... Honestly, I'm confused. I'm like, she should come, they should come, we should come. I don't know. So what if instead of talking about things that don't matter, that only we are allowed to think about because we are this rich nation, except we forget that most of us are not in fact rich. And I promise you, if people are feeling those things about pronouns and concern and hate and whatever, it is because they feel a death of despair. They don't feel purpose in this world. They're confused and lost, and who wasn't when we were young? And instead of that, what if we matched the business owners who have no cash and no future with the young people who have no cash and feel like they have no future, and we actually put them together? And if instead of private equity buying all the companies and the big corporations buying all the companies, we helped our youth buy the companies. I mean, think about this for a second. Private equity has one of the best tax codes in the US. And what's interesting is they have all these incentives to buy companies. Often they get grants to buy companies, they get tax incentives, etc. What if we actually changed some of that so that our youth got incentives? What if we gave a business owner a tax credit if they transferred it to a younger generation? What if we actually, instead of incentivizing the big guys to do long-term capital gains, we said if you sell your business to an individual as opposed to a company, you come up with a transition plan, and this individual has a net worth of less than $1 million, we give you some benefit. We help your business decrease in taxes, we give you a $50,000 grant, we use an SBA loan, an expanded program for the youth. I don't think these things are that hard to solve, actually. It's just that we have been pitted like a group of ants in a jar. You know how they talk about if you put black ants and red ants in a jar together, what happens? Nothing. They're chilling. They're actually pretty cool. They're like, sup, Bob? They're on the antennas going, they're in their lines, whatever ants do. But if you shake that fucking jar, what happens? They start to kill each other. And I think about that a lot in this country. I think we were chilling. And then, I think a few of us started waking up to a few things that seemed to tie a bit off. And what happened? They started shaking the jar. Because they don't actually want red and blue united. They don't actually want youth and elderly united. They want you to not own things and like it. And I think our pushback on that is by and large one thing, which is small business ownership. The cool thing about this that I like to kind of obsess on is when we buy and sell small businesses, we have like a little window here, guys. I think for the next 10 years, we're gonna have this giant wealth transfer, maybe the next 15. But if we don't learn to buy businesses now, each year we have more businesses, we have more profitable businesses close than profitable businesses open. Think about that for a second. We have more businesses start that are not profitable, but we have more profitable businesses close than open each year in the US. Now, what if instead you thought about a business, like every time you heard a business closing, imagine this. Say you guys own real estate anywhere in the US. You own real estate anywhere. It's yours, it's contracted, it's deeded. When you're done with that piece of real estate because it's too small, it doesn't fit in your deal box anymore, you're tired of the tenant, do you just go, okay, cool, bye. Fuck me, I'm just gonna, whatever, just deal with that. Of course not. You're like, I sell it, I do something with it, I transfer it from one person to another. Because inherent in every piece of real estate is value, right? A business is the same. Every single business has value. So one of my biggest issues is that we have people everywhere shutting down businesses, right? Well, every business that you have has what? They might have a website. Have you guys seen the new websites we can get? It's like Codie Sanchez 4297.io. Right? So they might have a website that actually has real value that's been around for a while. They might have reviews. 93% of customers will not buy a product unless there are reviews on it above 3.5 stars. They might have actual employees that want to work. Imagine that, that you could acquire those employees. They might also have inventory sitting that instead just gets fire sold or sits in somebody's basement. So in every single business, there's a list of, God, who knows how many pieces of assets that if it was real estate, if we could touch it, we would never just shut it down. We would realize that there's a value associated with every single one of these things. In fact, right now we own and built and I bought one of the largest small business marketplaces in the world. It's now larger than our biggest competitor. It's called BizScout. And BizScout, when we started out, it had 30,000 listings. That was 60 days ago. Then we had 47,000 listings. I checked out with our guy today, 47,000. Today we have 58,000 listings of small businesses for sale on BizScout. We're located just in the US. Of these small businesses in the last 60 days, we've connected 8,000 buyers and sellers of businesses. This is happening all around us, but think about this for a second. 58,000 businesses listed. And of those 58,000 businesses, only 1 in 11 will sell in any calendar year. So we have this supply glut where a lot of these owners are probably a few things, right? Like how many times have you talked to somebody about their real estate that they want to sell and you're door knocking and it's not listed or something? And you know, it's a house located, I don't know, in the middle of nowhere, Oklahoma. It's a single family, it's been beaten down, they've owned it for 20 years, and you go, yeah, would you want to sell your house? They're like, yeah, but $1 million. You're like, fucking bet you do. Bet you do. Now, business owners are the same, right? They might often go, I have spent 30 years of my life on this thing. You're telling me it's worth $10,000? Maybe it is. So is there a big education gap between what value is and what reality is? Absolutely. But my assertion for most people who want to buy and sell businesses is what Baron Rothschild said, which is, you buy when there's blood in the streets, especially when the blood's your own, right? You buy when there's blood in the streets, especially when the blood is your own. That was Baron Rothschild, one of the richest men in the world, whose legacy has transcended across generations. And the reason that I bring that up is because I think, how many of you guys think, you know what? Best real estate year I've ever had. Just silence. I feel it, it's hard out there. It's hard. And it's not just real estate, it's the economy in general. It is slowing down. We feel it. Despite what the politicians say, they're like, it's been going great over here. How are you guys doing? We're like, not that great. Drowning, actually. Literal hurricanes. And so it's hard out there. It's hard for everybody. And yet, here's what I'm pushing people to do. And I won't shut up about it all over the internet, everywhere. So apologies if you've seen what Kelly's seen over the last couple of years. Which is, I think we don't have a deficit of money in this country. We do not. We have $68 trillion in wealth that we can transfer intragenerationally. What do we have? We have a massive knowledge deficit. We have in the hands of the rich and the few the knowledge of how to buy businesses, how to value businesses, how to find businesses, how to structure business deals, how to finance business deals, and how to close them. And I learned it because I was on Wall Street and they taught me it. But for everyone else, we are like 30 years ago in real estate. How did you make money in real estate 30 years ago? Yes, just yes. You bought things. What things? All the things. And you made money in real estate because the market was not anywhere near as saturated as it is today, right? And so how many of you guys, if you could have picked an urban city 30 years ago and bought a property, you would have looked at the listings and you would have said, I'll take them, all of them. And I think that is partially what we have happening in the US. We just don't actually know how to grab it. So I'm obsessed on this idea that I think what we need in order to take back the businesses in our country is basically 4 things. We need knowledge. This is why we created something called Contrarian Community, but we're sharing it right now too. We need a group of people to hold each other accountable, because is there anything more scary than the first deal you did? Anybody remember that? Like your friends and family are like, but you're a hairstylist. Like, yeah, but I want to own real estate. Like, I could do this too. I got a brain. There's just good looking hair on it. And so we need a group of people who say that we're not crazy, but are a little bit of wet blankets. Like, yeah, maybe not that house, but like that one is okay. We also need a group of experts. We need people to actually do the thing that we used to do back in the day. You know how you used to take over a business back when this country started? Apprenticeship. Which, by the way, fascinating. Can you have somebody who doesn't know how to do something, that wants to learn how to do something valuable you do, can you have them work for you for free? No, it's illegal. Why do you think that is? Because no longer do they want us to teach the youth for nothing. So now we're incentivized to actually only go after high value people, because it's a lot of work having an apprentice. You've got to actually teach them a lot of things. And so the only way real apprenticeship happens is in rooms like this, and probably your kids. Because you say, Sally, please for the love of all that's holy, help idiot Donald to figure out what to do next. He wants to know some real estate. And he's my kid, and I swear to Christ, if we don't teach him this, he's unemployable. And so we need a group of experts that are willing to teach us things, which is why we created a group of facilitators and ambassadors who know how to transfer commercial real estate loans. That's a complicated business when you buy a business. That know how to analyze deals, that know how to do due diligence, that knows what quality of earnings means. And then the last thing we realized that we need is we need a mixture of 3, which is, we need what's called an investment committee. So, do you guys have investment committees in real estate? Is that a thing? Okay, so back when I was in investing in funds, and now in, like, let's say our venture capital fund, for instance, every single week, if you're a serious investor and you buy businesses, you know what you do. You get together with a group of other business buyers, and you beat up deals. This is how investment firms work. You get into a room, typically a bunch of dudes, and you sit around a desk, and typically you assign a devil's advocate, or you can call it a wet blanket, and somebody presents out their deal in brief form, and the rest of the people on the table beat up the deal. And they say, I don't like this, I like this, and because you all have skin in the game, and you understand the rules, you do it in the same way. So how do you actually learn to do deals in business? You don't learn to play basketball by watching YouTube. You play the fucking game, right? And the problem is that investing, we are not in those rooms. Those rooms are closed. Private equity owns 20% of our businesses, and yet way less than 0.01% of our workforce is in those rooms. How can they own everything and close the door? And so we need to have an investment committee where in our group we get together every Monday night and we beat up deals. And we look at a profit and loss statement. We say, what does this look like? And we look at the client concentration. We say, we think that's going to continue. And then you have what's called a deal team, or you can have a buy-side team. So in big investment firms, these are called investment bankers, right? It's the people who come and they look at the deal and they put a bunch of stuff together for the deal and they make sure the deal makes sense. Well, with our deal teams, what we do instead is we get a group of people together, who is your attorney, an accountant, we want a commercial real estate guy in there, and we have them get together so that you can analyze with an accountant and what are the tax consequences. You know, one of the worst deals I ever did was I bought a business. Hans would know how dumb this is too. I bought an LLC, a single member LLC. I bought a C Corp inside of a single member LLC, and triggered this giant tax consequence that basically I couldn't get rid of because I took a distribution from the C Corp inside of the single member LLC, which to a lot of people sounds like fucking nonsense, but it was a terrible idea. Well, it was a straight bad idea, dumb Codie. And the reason that happened is because I only had my legal team look at it, and my legal team wasn't talking to my tax team. So we got to get together a group of people to understand the 2 things that are most important with deals, which is the business that I'm going to buy what I think it is? And will it continue to be what I think it is? And then wrap it all in, is my packaging dumb, and we'll make both of those things irrelevant. And then lastly, what we need subject matter experts. So when you guys went and did your first real estate deal, I bet you talked to somebody who had done a real estate deal before, right? Well, in buying small businesses, it's the same thing. You kind of want to get with somebody, if you're going to buy a landscaping company, you think it might be nice to talk to somebody who's run a landscaping company? Of course. The nice part about this is these people who've bought these businesses, how many people are banging down David Osborne's door? A lot. They're like, you have a lot of money, you got this flashy plane, great hair, you know, and I would like to know how to do this. And in subject matter expert land in small businesses, how many times do you think a landscaping business owner is just like, their phone's ringing off the hook to talk about that? They're like, the thing is, I'm too busy. Everybody wants some of this. It's not the case, actually. And so we get together with a group of people who have bought all different types of businesses. There are 3,000 people in our group, so that they can beat up deals live. And my point here is we know one thing to be true, which is if you're going to make money, what is the only guarantee if you're going to make money? Anybody know?
Taxes.
Maybe, but no, not always. Private equity guys, 0 taxes. Half you real estate people know taxes. What the fuck are you talking about, taxes? The IRS is a bug. If you want to make money, what is the one thing we know you have to do? Four-letter word. Risk. You have to take risk. And what's fascinating about risk overall is one of my favorite mentors said that the difference between him and everybody else is that he isn't smarter, he wasn't at the time richer, he wasn't better. He just moves faster than everybody else. By the time they had thought about a decision, taken it to their investment committee, finally pulled the trigger, he had done it, made 3 mistakes, and found a better way. Your bank account is a direct reflection of how fast you move and the amount of risk you're willing to take. If you don't take risk, you will never be rich. Risk and rich are the same thing. Now, if you take dumb risk, you will also be poor. And, you know, the last thing I'll say is, let's play another game here. How many people in here have owned a business or do own a business now? Keep your hands up. How many people who have done this have also failed at some point? One hand goes down. Liar, 2 liars. She's like, this is for 20 minutes. She's like, I'm fucking winning over here. I don't know about you, but not winning. Give it 10 years. The truth of the matter is that every single business owner, every single real estate investor has lost money at some point. Every single one. You're going to have to. You need to know your hit ratio. But that's why it's so important that we obsess on the games where you have slightly lower likelihood of failing. Here's the problem with risk today, though. One, we don't move fast. Most people, and you guys aren't like this, but most people, I get in rooms like this, and I scream at them for an hour about things. And at the end of the hour, it's largely about buying businesses. I think I'm pretty convincing that this is like a reasonable opportunity today. Don't people think that?
Yeah.
You're like, yeah, tracks makes sense. And then people in here go, yeah, I should do this. Okay, I own a bunch of real estate. I should probably buy that property management company. I should probably own half of that landscaping company I pay a couple $100K to each year. I should probably, that social media company I should use, I should ask for like a rev share affiliate, you know, percentage that I also own some equity in it if I keep recommending everybody in here to it. Yeah, I should do that. And what do? Not a goddamn thing.
Checkering.
And the reason that we aren't wealthy is not just that the big guys have their foot on our neck, although they do. It is because only 6% of us take real risk. And so if I could impress anything upon you, it would be when you see something in the world where there is a draft and opportunity, and here's the difference, here's where I've messed up before. You are uniquely situated to take advantage of it. That's an important one. Like, I don't know if I look like it, but I wasn't a giant weed smoker. When I got into that industry, I wasn't like, I know all the strains. And so a lot of times we get into things because we think they're sexy. And when I made a lot of money in Latin America, it was the opposite of sexy. You know, I made a lot of money there because it was scary and people didn't like it and no Americans were going down there. And so I didn't have to be that smart, I could win. When I got into cannabis, I was like, there's a bunch of C- players, Hans Melt, you know, we got a bunch of, it's like Neanderthals running the joint, basically. So I thought I could win against those guys, and then I realized, oh no, I'm also working with the Neanderthals now, so that's not gonna work that well. But when I look at an opportunity today, I think, we call it our perfect fit business. So in the book that you guys are getting and in our community, What you're basically looking for in the middle is the thing I wish people would have told me. What does everybody say? They say if you want to make money, follow your The only people that say that to you are people that are already rich. That's what I've determined. They go, I want people to like me. I'm going to tell them to follow their passion. I'm the cool dad. No, that's bullshit. Okay, you can say passion, but I would say the word instead obsession. Like, where is there something that, like, you just, like, you know, you got that friend that's like they won't shut up about doing deals. They're just like a deal junkie. They're always like sending you something. They're analyzing spreadsheets like crazy. You're like, Sally, it's Tuesday. You know, can we take it easy? Okay, so maybe that's your obsession. You're like, I love spreadsheets. Okay, cool. That's me, by the way. I love spreadsheets. Okay, and in tandem with a spreadsheet, you're looking for your network. Where do you have a group of people? That's why the way we built our community, I'm obsessed with this idea of like, I don't know everything. In fact, I don't know a lot of things. I'm really honest about that fact. And so I want to be like, I don't really know how to draw a spider web, but if I thought about a spider web, it would be like at every point where I have some friction, I got not a how, I got a who, right? What's your network? And then simultaneously, I want to think about, it's not enough to be like, I love spreadsheets, can't add, can't multiply. That would not be good for me. It also has to be, hey, I'm really good at Excels. Really good at spelling. Yeah, I'm good at spelling. I'm good at skills. I'm good at, I love Excels, and I'm also good at, you know, addition, multiplication. And then that might work for me. And so what I'm trying to get more people to do today is think, where can you take risks? Where you can do your perfect fit business, and using your perfect fit business, have an unfair advantage where it makes it really unlikely for you to lose. So let's think about me today. And this is like, if you're a business owner and you haven't bought businesses or added businesses to your portfolio, I just think it's the silliest thing of all time. I think it's so silly because with businesses, you grow by 100 clients at once instead of one. If you have, you know, there's 3 levels, I think, to making money. So, and I wish I learned this earlier. I learned this way too late. But let me show you level 1, like poor people thinking. Poor people thinking is, you have a problem. What do you do when you have a problem? Whine about it. Those are all good answers. Okay, if you're not a piece of shit, here's what you do. Think about, how do I fix this problem? How? I got a problem, what am I going to do about it? Maybe I'm going to be a whiny bitch, that could be true. How? Number 2, mid-wealth level thinking is not how, but who. Nice. All right, I got a problem. Codie can't spell. I better go find somebody that can spell instead, right? So I'm going to find my who to solve that problem. Let me show you how the really, really rich think. It's not how do I solve the problem. It's not who solves my problem. It's how do I buy an almost certain likelihood of success of my problem. And what do I mean by that? It's like, we need new products at our company. Do you think Jeff Bezos is a smart guy? I think he's doing all right. I think his choice of women is questionable. Yeah. Well, besides that, I got his bank account's bigger than mine, so I listened to it. So I think Jeff's pretty smart. Now, do you think Jeff Bezos could have gone and started Whole Foods? Yeah. John Mackey's smart, but I wouldn't beat against Jeff Bezos. Do you think Jeff Bezos is pretty smart and he could actually go start a diaper company and integrate that into? So why didn't he? He's smart because he knows that the highest leverage thing he can do is he can use the business he already has, the equity he already has in the business, the cash he already has in the business, to buy another business. He understands that the easiest solution is almost always to buy his problem. In fact, famously, a friend of mine, Sean Curry, he told a story of, I'm gonna mess it up, but let's pretend like it was the founder of Twitch, it might have been. And it was the founder of a tech company. And he got an offer from Jeff Bezos to buy his company. And the guy originally told Jeff, no. Then Jeff put a really big offer on the table. And they went, and Jeff asked to have breakfast with them. And so they had breakfast, and this guy sits down with Jeff, and the breakfast table server comes over. And and Jeff for breakfast orders like squid pasta or something. He orders like a weird ass squid dish. And the founder kind of looks at Jeff and he's like, why'd you buy that? And he looks at him and he goes, I was curious about it. He bought his company because he was curious about what that business might have been to Jeff Bezos's bigger company. He actually bought a company because he thought maybe that company could help him get to another level. Because what do we know more than anything else? Do you think if you own a business right now today, you have an information advantage or disadvantage from somebody who is going to buy your business? You have an advantage. If you're in an industry already and you already know property management, if you were to go buy a property management company, do you think you'd probably understand pretty easily what's going on in that property management company in order to see whether you should integrate it or not? That's Jeff Bezos. He goes, yeah, I was like kind of curious how this business would fit into ours overall. Instead of building the whole thing, I just bought the squid. And that's literally how the rich think. They don't think like we do with buying clothes and liabilities. They think about buying businesses in that way. And I want us to sort of internalize that idea. The last thing that I want to say is a lot of times people go, I don't have money to buy a deal, or is this a good or bad deal? If I could leave you with anything before, how much time we got?
It's 11 right now.
Oh, perfect. You have no time for questions. We'll do one question. I want to do an interactive presentation. Psych. So the last thing I'll say is, if somewhere in your head you're thinking right now, I don't have enough money to buy a business, I want you to try on this question instead. Is it that I don't have enough money to buy a business, or I don't know how to get the money to buy a business?
Amen.
I want you to try on, if I right now don't know how to buy a business, is that I can't learn how to buy a business, or I don't know how to learn to buy a business? I want you to try on another idea in your head, which is right now, if you're like, I don't know if I should buy a business or not. There's lots of distractions in the world. I want you to ask yourself a question instead, which is, how would I best be able to tell what the highest use game of my time is? You learn how to play the game, and then you figure out which way to go. If I could leave you with one skill more than anything else that I've learned that's made me more money and allowed me to lose money too and still win, because everybody loses, it's this. It's, can you become a deal maker? Because once you become a deal maker, it doesn't matter if this country goes up in flames and they push you out and they get you into another country and you flee and you leave behind all your real estate, you leave behind all your money, you leave behind everything that you know. Let me tell you one thing I know for sure. It's really hard to become a doctor easily in another country. It's really hard to go do a new real estate deal in another country. But if you know how to make deals, you're bulletproof. You can do that anywhere you go. And so that's why I'm obsessed with this single idea. Can we get more people to think about buy instead of how? And can we create a nation of owners instead of renters? So thank you so much for having me today.
I think I have time for a couple questions.
Okay. Great question.
I'm gonna let you pick, so I'm not in trouble.
All right.
And let's be real brief with the question, and then yell at me if I'm not brief with the question, because I'm not brief.
Okay, I'll be brief. My reservation or curiosity is around geographic. What is your perspective on geographic proximity versus anywhere in the country? I live in a small ski town. You know, I think there are some mom and pop businesses my husband and I have been talking about, trying to hunt them down, but that's my question.
Great question. Okay, so, in real estate, do you guys use something called the deal box? Like, here's the type of house I want to buy. What we obsess with at Contrarian Community is, can we help you do the most important thing you'll ever do, which is what the Oracle of Delphi says, know thyself. Geographic proximity may be important to you, it may not. It may be necessary for you, it may not. The real question you need to ask yourself is, when I see the deal that is perfect for me, will I know it? We have to turn on your reticular activating system. And the way that we do this is by teaching you what your skills are, what your obsessions are, what your network is, and then putting together a deal box that only allows you to focus on the businesses that are the opposite of Neo in the Matrix turning at the girl in the red dress. That is how people die in business buying. Is they like, oh, I found this business, it's right in front of me. And like, I never answer that question. Like, should I buy this business because this and this? Until you filled out your deal clarity sheet and you filled out your deal box, you're not doing a deal. After you do that, you're gonna know if you want like the 6'5", blue eyes. You're gonna have it done, right? But until then, the real answer is gonna be know thyself, and then you will see deals everywhere, and it is a sickness I will pass on to you.
I appreciate that. I'll take it.
Yeah, I like it.
It's a serious question.
Yay.
When will I be able to vote for you for president?
First of all, such good energy from this lady. I knew I liked her. Wasn't
She's
just
my
a compliment?
neuroscience coach, just in case you need one.
What? Of course she is. Sense of the world. But thank you for the question. I don't know if I have the pain tolerance for that, but I certainly know one thing that gives me a lot of hope for this country and why I probably keep doing this. I would be very depressed, sad, and anxious. And actually, Tanner and I were with a guy like this just yesterday. If all I did was think about how I could get richer, and all I focused on was buying more businesses for myself, I would be a really bad person. And it through I don't think much fault of my own. And I think the only reason that I keep having a lot of hope in this country is I go around to rooms like this, and I'm like, there are some builders here, and I think we just have to talk to each other a little bit more. And I truly believe that no president can save us, but one can really fuck us up. What we gotta be careful about is, can we protect the things that matter? And maybe the last thing I'll say here is I do think there's a little bit of attack on women in a weird way in this country, which is we are very caring beings, women. We have to be. Otherwise we murder the little screaming things that shoot out of our vagina. They rip it and we love it. I don't get it. But I think I'd be pissed if I wasn't high EQ and really loved the thing. And so we have this massive amount of caring. And I think what we just all have to guard ourselves against is who is trying to emotionally manipulate us. And we gotta go back to the math as much as we humanly can. Because I think all around us I'm seeing women, this is a crazy statistic, an increase of 55% from 2000 to 2023 in single women in this country. 55%. I actually think men and women, by and large, we came from one of each of them. There's a reason that we're here together on this planet. I'm divorced before, so I've met a few fucking men I don't like. Don't get me wrong. I've also been a woman I didn't like that much. And so I think as women we have this opportunity to kind of level up a little bit. And so I think you probably see this even more with the brain, but it was a beautiful question. Sorry for my rant, and thank you.
That's beautiful. One more question.
Let's do one more and then we'll bounce.
Hi, thank you so much for being here. This was great, and it's a little surreal because I follow you and hear your voice all the time. So seeing you in person is great. I have made a couple of offers to buy businesses, and have run into the people think their business is worth a lot more than it really is. But I also run into a lot of where the founder CEO, it's like a key man, I don't want to buy a job, I want to buy a business. And so how do you kind of think about that as you're looking at these companies that everybody's retiring and wants to get rid of, but if they're working in the business, then how do you kind of think about replacing them or making it still work after they're gone?
Yes. Okay. Yeah, great question. So let's do the first one really quick first. So the first one about if you buy a business, or you want to buy a business and the owner thinks it's worth more than you do, what do you do? My first answer would be talk to a guy about how hard he had to work in order to get you to marry him, for instance. You're going to do the same thing with a baby, with a business as you would a baby, as you would a hot chick at the bar. You're going to have to go back to the well a lot. And so there's a beautiful thing in investing that we have over almost anything else, which is time. So if I was you, I think where most business buyers go wrong is they go, hey, I want to buy your business, and the seller goes, yeah, it's $1 million, and you go, that's too high, buy. And do you go to a guy at the bar, I'm not saying you did this, but theoretically, do you go up to, if you're a guy and you go up to a chick at the bar, do you go, hey, how's it going, do you want to marry me or fuck tonight? You're like, what? Why would you? I'm not going to answer that. That's too much, too fast. And yet in business buying, that's often what we do. We go, oh, hi, I'd love to buy your business. You want $1 million for it, but you only do $200,000 in revenue. Why do you think it's worth that? Whoa. This is a little bit of probably what women haven't had to do that much, which is we are cajoling them. We are getting to know them. We are seducing the business owner. And so take that with a little bit of love and respect. And so expect that you're going to build a relationship with a person who has built something that's lasted the test of time. And so get to know them for a minute before you fuck. No?
It is such a shame that she is not authentic.
The second question really quickly is how do you buy a business or a job? It's a really good question. So a couple different things. One is we have something called a due diligence checklist. You guys probably have it in real estate too. And so we go through every single step of the due diligence checklist to make sure the business is actually what we want. But one of the things I think we have to get really clear on when we're buying a business is, what are we buying of the business? Like, I think it's slightly unreasonable for us to think we're going to buy a profitable business for $0 down, absentee, 20 hours per week, in an industry we don't know, and it's already gonna have an operator in it. Probably not that reasonable. Now, have I done that before? Sure. But was it my first deal? No. And so one of the things I think I might ask you there is, once you find, almost every question goes back to this perfect fit business. And it goes, okay, so if I found that business with Jonathan in it, I didn't buy the whole business, right? I bought a portion of the business because he was already running it, and I only took the job that I wanted in that business. And so I think you have to start, the average business buyer in our group looks at about 100 deals, high level, looks at about 10 to 20 deals more in depth, and then after 10 to 20 really narrows in what they want. And so, I don't know, let's say right now you run a series of single family homes. And you're like, you know what, I'm really actually good at operational proficiency. I'm really good at oversight. Like, I love a Notion template. I have some great outsourced VAs. I could probably insert another property management into my business. So I'm not buying a job. I'm just buying a client list. Yeah. And so I think what I want you guys to obsess on a little bit more is, and it's hard to transcend on the internet, which is I think why a lot of people get stuck here. Like, if you don't know what you want, you will never find it. Mm-hmm. And we know that in life, but in business buying, it's like, we're busy. How are we supposed to spend time like looking for a deal? One just like kind of pops up and we think that might be it. And what I would say is, when you feel like a deal might be it, it's probably not it. You probably need a few more reps until eventually a deal's gonna come across your plate that you're gonna be like, this deal is so good, I'd be stupid not to do it, and so would the seller. Does that help in a squishy way? She's like, I wish you would have said fuck to me last, but yeah.